It's really important that if you're structuring a mortgage, you know the difference between fixed and floating. And in this video, I'm going to tell you, plus I'm going to give you the stuff that you probably don't know that no one talks about because different banks have different rules about making extra payments, whether you're on floating or whether you're on fixed. And that's kind of important if you want to pay off your mortgage faster. So first off, floating is basically the default. You'll go onto floating if you don't fix your mortgage, and that is usually more expensive and it goes up and down with the market. For that reason, most people do not like this option because it's more expensive and unpredictable. However, if you fixed your mortgage, let's just say you fix it for 2 years at 5%, you know for that 2 years that at 5%, your repayment is going to be the same every single week, fortnight, or monthly, depending on what you choose. So that gives you not only security, peace of mind, but it's easier to budget and is usually cheaper than the floating rate. Where people go wrong with fixed rates is that they fix for the wrong period of time. So if you fix for 5 years at 7% and then rates go down in the first couple of years to 4%, you're going to be pretty bummed because you're on 7% when rates are at 4%. So you think, okay, I'm going to break my mortgage and get to that. And then there'll be a massive break fee. Now, there's not always the guarantee of there being a break fee. It's just something that you need to research and look into by asking your bank before you do it. So being really, really clear with how long you want to fix for is an important thing. However, that's almost impossible to do because you can't predict the future. I can't predict the future. And in a way, we're doing our best educated guess of how you can fix your mortgage. And the good thing is, you don't actually have to choose fixed or floating. You can choose both. A lot of people think that you just have to choose one fixed term or floating. You can actually split up your mortgage into multiple tranches and have different things for different reasons. So you might go a third, and put 1/3 on floating, 1/3 on 1 year, 1/3 on 5 years, which is an extreme example. If you go down to my next video or the video after that, I've got examples of how you can structure your mortgage. So skip to that one if you want to know that. But before you do, how can you make extra payments on floating versus fixed? If you're on floating, there are pretty much no rules. You can make extra payments of $1 a day, or you could do $100,000 in one go. That's why some people like floating, because it gives you the flexibility, even though it's a higher interest rate, to make extra payments when you need them. However, when you're on fixed, there are rules, and these differ at different banks. But the general rule of thumb is that if you have a mortgage and it's on fixed, you can make an extra payment of equal to 5% of the loan amount per year. So $1 million mortgage, 5% is $50,000. You can make an extra $50,000 worth of payments per year during fixed. Now, of course, if you're wanting to just increase your minimum weekly repayments, then you just divide that by 52 and put that amount on there, and that will be the limit that you can do. Now, some banks differ, and some banks will also let you do lump sum repayments as well. The good thing with most main banks is if you're trying to do that on your app, it will tell you the rules. If you slide the thing up too high, it'll say, whoa, you can't do that. Here's the fee if you want to, kind of thing. Now, the third part that I haven't really touched on, and I'm going to do that in another video, is what revolving credits and offset accounts are. These are essentially floating, so they're at a higher interest rate, but the way that they work is to offset the mortgage. And go watch the next second video down or third video down, which explains the difference between revolving credits and offset accounts and how you can utilize them to save interest.